Hey everyone, welcome back. Now in this video, we're going to be going over time frame alignment and how to use it and how we use that to frame trades. All right. Now, time frame alignment is very important because it's showing, like what I was talking about in the past two videos. It kind of helps combine it, right? Daily bias and drawn liquidity, right? Now, if your daily bias is correct, right? Well, not just correct. If you have a daily bias, now you're going to use something to frame a narrative. This helps with the narrative, right? Whatever PD array that we're using, that is the narrative for our entry or our market maker model. Okay, so these the most obvious ones are these. People use the daily, the 1 hour, and then the M5 for entry. And then they use the 4 hour, 15, and the M1. Those are the two most common. Now, this right here, now when I did that, I said daily, 1 hour, and then M5. Now, the daily is where you get your bias, hourly is where you get your narrative, and then the 5 minute is like where the entry function for that narrative, right? So, and then for the 4 hour, you use the weekly, right? I use the week, like for the 4 hour, like I use the weekly and the daily for my higher time frames, right? You've heard me talk about that. And then I'll use a 4 hour PD array, and then I'll look for a 15-minute PD array as well, right here. And then I'll use like the 1 minute. So these are the two most common. I'll just write them out over here. So you got the 4 hour PD array, and I use a 15-minute PD array. I use a 1 minute MMXM, okay? Or you use the daily PD array, 1 hour PD array as well. Okay. Now, those are probably the most common for day traders, especially for people watching this video. People that swing trade, you're probably using like you'll probably use like the monthly, and then you'll use like the daily, and then you'll use like a 1 hour for your execution, right? That's probably like what happens. But for day trade, I'm just gonna talk about these because these are the two that I use. Now, with that, it's okay to use like the same PD array, like for me, if I see prices reacting away from 4 hour fair value gap, and I see another 15-minute fair value gap after we moved away from it, I'll drop down to the 1 minute chart once price comes into it. You see what I mean? That's how you would use it. And the main reason for doing this is because like once we get this bias right, we use this to frame a narrative. So there's a narrative here on the middle time frames, intermediate time frame, whatever you want to call it, and then the entry function on the lower time frames, right? Pretty simple. I'm gonna show you guys some examples. Let me go back to my Discord here. I'm just gonna pick a random example here. So for me, every morning, and this is how I would recommend doing it. Let me first remember how I was talking about the charts, right? How I have my charts set up. The reason I have them set up is because I'm using what? I'm using these two. I'm using the hourly, the 4 hour, and then the 1 hour. Okay. You see how I have a 4 hour and a 1 hour. So I'm looking every morning. I come to the charts. I'm like, okay, let me look for 1 hour PD arrays, right? So I'm looking for this morning. I was looking for, I forgot what it was. Oh yeah, I was looking at this 4 hour fair value gap. I want to see it move away from it, and then a 15-minute fair value gap or a low to be put in, and then to run that low and then go higher. Okay. So I do that every morning. I would have marked out this 4 hour PD array right here. And then I would have waited on the 15-minute for a reaction away from it. And then I would have wanted to see a PD array in the 15-minute to help me frame a 1 minute market maker buy model. Okay. So let me go back to here. It's right here actually. So for this right here, I have the hourly. I'm bearish in the daily. Okay. I already have that in mind. So now I just need to look for bearish PD arrays to frame that narrative. Okay, so I got the swing high right here. The best PD arrays to frame a narrative are swing highs, swing lows. Okay, and then inefficiencies. Remember I said external and internal range liquidity on the last video? Same thing. So price runs this high, right? I immediately drop down to a 5 minute chart. 5-minute chart, I'm looking for a market maker sell. I'm looking for my model. Okay, could come in the form of anything. I use the unicorn. We'll talk about that later. Set my limit order right here, stop above here, and then I was TPing this low. All right. So that's how you use it. All right. Now recommend, like I said, to just wait on the time. Mark out your PDRAs that you're looking ahead of the time, ahead of New York Open, or whatever time frame you're trading, and then just wait for them to get hit as the session goes on. I do it on the ES and NQ, and then I only trade the hourly and the M5 for oil and oil and gold. So, get some water actually. As soon as I got this morning, for example, I had this hourly FEG marked off, right? Because I'm bearish. Price ran this high inside of a SIBI. I'm bearish. These are my draw on liquidity. Pretty simple. I want to see a market maker sell model to the downside. I never really got it. Price is kind of consolidated. That happens, right? Doesn't always give it to you, but that's what I was looking for. Okay, that's how you use it. So I'm just sitting here until price comes into my point of interest, or my PDOA, as this thing likes to say. All right, and then once it does, then you can start to frame your model, which is what I was trying to do right here before it didn't do anything actually. Okay, does that make sense? Sure it does. And then for gold, let's just look at gold real quick. We'll talk about high and low probability conditions in a couple videos from now. But I was basically watching this bullish fair value gap right here. Price never came into it, or we got a nice move away from it. We never really got a nice move away from it. In fact, we actually went lower. And this is called trapped order flow. We'll get into it, but yeah, Friday, huge move on the week. Not expecting much to happen. Okay. So that's why we got that. And then let me go back to some more examples. So that's what I recommend, right? So whatever time frames you're trading, whichever. Go back to it. So whatever PDRAs you're looking for, have a chart set up for that. Okay. So I got the daily, got the hourly, and the 4 hour. Right. Marking out PDRAs. Pretty simple. And then let me go to some examples here. And the reason why it's so important is because you're always trading. You want to be trading on the side of order flow, good order flow, right? Because that's where you're going to find the low resistance liquidity. What is low resistance liquidity? That's when price just runs right through. There's barely any resistance for price to bounce off of, right? It's in a hurry to get somewhere. It's not waiting around, and those are where you're going to find the best trades. So let me find another example. So this is a good one right here. So 4 hour, right? I had these relative equal highs marked off right here. So once price took out these relative equal highs, I did what? I dropped to the 15-minute chart. Now I want to look for a 15-minute PDRA. All right. Now price keeps going lower, lower. I'm like, okay, I got 15-minute PDRA. Now I can start to look for my entry function. All right, and that's the 1 minute. So I drop down to a 1 minute chart. Price comes up into it right here, makes a high, makes a low, makes another high, runs through that low, and then displaces, and then retests, and then goes lower. We'll get into my entry function later, but that's kind of it. Look how fast it went too. Why? Because we're on the side of low resistance liquidity. All right. A lot of my trades are. Let me pick another one here. Oil. So 4 hour. Right, we're trading on the side of order flow. We're traded, if you go back to the videos, trade on the side of order flow. We're on the right trend. We're on everything is right. Okay, so 4 hour SIBI, right? 15-minute buy side liquidity, relative equal highs. And then for this one, price actually stops us out. I'll post all my trades in here so you guys can see that. But look what happened here. So we had our entry function. This is my breaker, and then price just wanted to stop us out. Okay, that's all right. I'll say this is raw, so I don't know like what happens. Like I did not know I was gonna choose a trade recap that was gonna be like a loss. But so for me, is that invalidated? No. Why is it not invalidated? We're going back to daily bias videos and draw liquidity because price has not yet closed above here. It may have, but until that happens, I'm gonna be looking to frame shorts. All right, let me actually find a winner here. I think I did that one already. Let me do this one. Okay, so bearish on the daily. Okay, obviously it looks like this is pretty bearish. And then the hourly, we got our point of interest here. We're marking off those every morning before open. Price comes up into it. And then we're looking to take a trade away from it. So price closes below, retest, bam. Okay. So that is time frame alignment, like really in a nutshell. People always ask me, can I mix the time frames? Can I do like the 15-minute PD array with like a 3-minute? No, I don't recommend that. Just keep it simple, stupid. The more you fiddle around with time frames, so this is the time frames I had to use right here: 5-minute, 15-minute, 1 hour. The 1 minute is on here. I just type in 1 minute usually. But yeah, that's pretty much it. Remember these for time frame alignment. And for something that's not talked about enough with like the time frame alignments is, I think, how important it is, because a lot of times people will trade, they'll try to like counter trend trade, and that's usually where people get messed up, right? So staying on the side of order flow, you get higher probability trade setups, and that is what you want to have. Especially, a lot of you guys that are new that are watching this, like, you don't want to be like counter trend trading, like trying to sell this external high right here. At least not until you get some nice structure to the downside first. So that's time frame alignment. Screenshot this if you want to. And these are like my favorite ones. And hopefully these videos are starting to all tie in. Remember, like the first couple videos I did about setting up your trading view. This is why you would set it up, so you can mark off those points of interest. Points of interest are our PD arrays, all right, for the time frame alignment, all right. And once we get the PD array hit, once price comes into it, then we'll drop down to our properly aligned time frame for entries, and then we look for market maker buy model, sell model, to either previous day high, previous day low. Remember what I was talking about with the draw on liquidity, whatever our draw on liquidity is: external range high, external range low, internal range liquidity. So hope you guys enjoy this video. I'll see you guys back here on the next one.